All right, so here in 2016, I wanted to address these two economic extremes once again, hyperinflation and deflation, because these subjects have gained a tremendous amount of traction on the internet over the last several years. Now, the cold hard truth is neither one of these things happens very often within an economy. All right, hyperinflation specifically has never happened in the United States any time since anyone listening to this has been alive. Now, if you go back centuries ago, you could read about how the U.S. Continental did get into some trouble. But as far as the U.S. dollar goes, it is the world's reserve currency. And I think that hyperinflation has a less than 1% probability of happening here in America. The most common theme within an economy is usually just standard inflation. Deflation, which is defined as a currency contraction and prices universally collapsing across the board, did happen in '08. We had a global banking meltdown, and it happened for a pretty abbreviated time frame relative to the Great Depression, for example, which was by far the most prominent example of deflation any time in recent history. During the 1930s, we had prices coming down pretty much on an annual basis. But again, the bottom line here is, yes, America does have a debt problem, but this does not have to result in hyperinflation or deflation. Part of being a contrarian is assuming the opposite of what the crowd is saying. And the crowd has dominated the internet through these two extreme views. So I would say there is a decent chance we will continue along at the same pace we're going on. And that is, the markets will continue these sideways patterns and the inflation rate will remain relatively low here in America. But if someone put a gun to my head and they said pick between deflation and hyperinflation happening, I would say the probability of deflation occurring is way higher than hyperinflation. Lastly, please understand that the majority of bull and bear markets here in the United States in the stock market have not been a direct consequence of deflation or hyperinflation. For example, the bull market in the 1950s was not during a high inflationary period. The bull market during the 1990s in U.S. stocks was not during a high inflationary period. Conversely, the dot-com bubble that popped in 2000 and we went into a bear market for 2 years, that was not a deflationary meltdown. The stock market crash of 1987 was not a deflationary meltdown. So remember that these macroeconomic situations do not always have to coincide with stock prices or commodity prices going up and down.